Good morning, everybody. We're back again here. The market on the equity markets was sharply lower this morning on the Evergrande news that possibly they're going to default on their loans. The second largest retail state in, the second largest retail real estate company in China is about to default on about $300 billion of liabilities. So it's putting a lot of pressure in the market here, and we're looking at pretty much the effect that possibly the fear is that it could spread into a worldwide systemic risk or contagion, you might say. So it's causing a lot of nervousness in the market. We have a lot of news coming out this week. Besides this news about Evergrande, we have the Federal Reserve coming out regarding tapering and not tapering, how they're going to handle interest rates in the economy. And, under the kind of scenario that we have right now, particularly with the uncertainty now that we have in the financial markets, in the credit markets possibly, with the current inflationary spike that we've had. At the same time, we've had pretty much stagflation, more or less, for the last few weeks, indicating, and we have yet to see so far the kind of economic growth that we have, the kind of employment that we have, if people are being hired. There are a lot of different fundamental issues that need to be resolved, and the month of September usually is a volatile market. With regards to what we do here, let me share with you the weekly report, the AI that was produced by the Variable Changing Price Momentum Indicator, which is essentially what we use whenever we get this kind of a fundamental chaos, you might say. And nervousness in the market, a lot of panic selling in the market. The month of September usually, again, is a corrective month for the equity markets, but let's see how it affects as well the gold mining shares, and whether this correction is going to be deeper than the 2-3% so far that's experiencing. So let's take a look at the bear with me 1 second. I'm trying to turn on the robot here. So let's take a listen to the weekly silver report.
Hi everyone, this is Equity Management Academy with the weekly silver report for September 17, 2021. Summary. The weekly trend momentum of 24.16 is bearish. The weekly VCPMI of 22.89 is bearish price momentum. A close above 22.89 stop negates this bearishness neutral. If short, take profits 21.77 to 21.18. Trading instructions. Weekly trend momentum 24.16 bearish. The silver futures contract closed at 22.34. The market closed below the 9 SMA 24.16 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum 22.89 bearish. With the market closing below the VC weekly price momentum indicator of 22.89, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops, and negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 23.45. Sell 2, 24.58. Exit. Shorts, buy 1, 21.77. Buy 2, 21.18. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 21.77 to 21.18, and go long on a weekly reversal stop. If long, use the 21.18 level as a stop close only and good till cancelled order. Look to take profits on longs as we reach the 23.45 to 24.58 levels during the week.
Okay, so we have pretty much come down on the daily. If you're taking a look at the weekly data, on the left, we're looking at the daily numbers, and we trade basically the daily against the weekly numbers and against the monthly numbers. We use all of the trends from a technical point of view. For day trading purposes, we have specific data that we use for day trading purposes, and in this case, the market on the 19th at about 7:15 p.m. activated a buy signal here at 7:30. In silver, 7:30 p.m. And when this signal is activated, it automatically, again, structures the level above as your target and use the level below of your entry point as your protective level. So this is long from 2202. The target is 2259, which is the daily average. Not quite getting up there, but it is in a bullish mode. In terms of the weekly signal, the market trading below the average price of 22.89 is in a bearish mode, so it's kind of a conflicting signal. Bullish daily, bearish weekly, and the levels below here of 22.06 to 21.77 are telling us that these are extreme high probabilities of a reversion unfolding from here if the market tests these levels here. One of the things that I want to point out is the level of 21.77 daily level is very harmonic with a weekly level of 21.77. If we get a correction in price ideally into, let's say, this buy 1 and buy 2 daily and weekly, that probably is going to be the highest probability of a reversion unfolding. Although the level above here on the daily of 2206 already has activated a buy signal. So that is the interpretation basically of the intelligence that we just heard from Nikki the Robot. Let's take a look at silver here. I'm sorry, at gold, 1759.20.
Hello everyone, this is Equity Management Academy, with a weekly gold report, for September 17, 2021. Summary. The weekly trend momentum of 1794 is bearish. The weekly VCPMI of 1770 is bearish price momentum. A close above 1770 stop negates this bearishness neutral. If short, take profit 1729 to 1703. Trading instructions. Weekly trend momentum, 1794, bearish.
What I want to point out, once again, to distinguish the difference between the trend momentum and the price momentum. The signal gives us a trend momentum which identifies basically the bigger picture, the bigger trend, you might say, in the market. And the bigger trend in the market, obviously, is from the low of 1767 that corresponded to a Fibonacci retracement, is bullish. We've established a low, a double bottom, and we've gotten up to a high of into that 1916 area, which essentially created this uptrend channel on the longer term picture, on the bigger picture. And we've come down, as you can see, into this channel, reverting each time from this channel at a higher level, which indicates the trend momentum. This is the trend momentum from the low of 1677. It's bullish. Now, the price momentum is the velocity of price reaching those levels, or reaching or unfolding into the trend, the bigger trend. So, once again, the trend momentum is the big picture, bullish or bearish, above the 9-month, yearly, or daily average price, whatever average you're using for that sector. And the price momentum is the velocity of money, of price into the targets that are anticipated by the variable changing price momentum indicator. So if we go back here, we're taking a look at a daily gold chart, 1760 last, up 960. It's making a bottom into the lower end of this channel, and you might say that right underneath, you're looking at the blue levels of the variable changing price momentum indicator that is identifying the highest probabilities mathematically that we can experience a reversion. If we get down to the buy one, you're looking at a 90% probability relative to the implied volatility of the mean, which is 50-50 standard deviation. What we do, again, for those traders that are just joining me, what I do here is I use this indicator to trade the mean reversion, or the reversion to the mean principal, which essentially identifies the average price, ideally, initially, and once we can identify the average price, then we can extrapolate the extreme levels above or below. And as a trader, I look for the highest probability trades, which is essentially when the price stabs into this blue levels, you might say, which essentially correspond always to the other indicators that are standard indicators like Fibonacci retracements, or pretty much support resistance levels. Primarily, let's say the RSI, which indicates extreme levels of the market being overbought or oversold. So this is indicating, obviously, as you can see, there is support. And we're using also cycles, which are this round formations here, the circular formations that you see, which indicate basically the bottom of the cycle at the bottom in the vortex, you might say, when those unite. And although it's not 100% obviously accurate, obviously I'm showing you what I'm using to identify the best trading opportunities in this particular market, which is gold and silver, and essentially are the, I believe, essence of what a currency is, or essentially a monetary unit, as opposed to taking a look at Bitcoin, you might say, which is being discussed right now, whether it's a security or whether it's an asset. The market in Bitcoin, if we take a look at the daily charts, using the weekly data that we have for the week, it's come down into this, once again, blue area, into this deep blue area on the weekly of 43,971. And the AI tells us, do not sell into this. This is where you cover your short positions, basically. Let's take a listen to Nikki the Robot.
Hi everyone, this is Equity Management Academy with the weekly Bitcoin report for September 17, 2021. Summary. The weekly trend momentum of 44,469 is bullish. The VCPMI of 46,248 is bullish price momentum. A close below 46248 stop negates this bullishness neutral. If long, take profits 49,258 to 51,573. Trading instructions. Weekly trend momentum 44,469, bullish. The contract closed at 46982. The market closing above the 9 WSMA 44469 is confirmation that the trend is bullish. A close below the 9 WSMA would negate the weekly bullish short-term trend to neutral. Weekly price momentum 46,248, bullish. With the market above the VC weekly price momentum indicator of 46,248, it confirms that the price momentum is bullish. A close below the VC weekly, it would negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 49,258. Sell 2, 51,573. Exit. Shorts, buy 1, 43,971. Buy 2, 40,923.
So we come down to the buy one weekly level, and a close about 43,971 is going to activate a buy trigger on Bitcoin on a weekly basis. If activated, it's pretty much suggesting and recommending that this correction might be completed. The lower level here of 40,923 is a level also used to accumulate if it comes down to there. These two levels are levels to accumulate, basically, as the AI of the variable changing price momentum indicator is recommending that this area is extremely oversold. If we close about 43,971, we're looking at about a 90% probability of a reversion unfolding, going back up to 46,248. That's a pretty good trade. The level below 40,923 has a 95% probability of a reversion unfolding if activated. And so we have the levels, the structure. We let the market do what it's going to do and create the highest probability trades, which is really what I want to do, what I want to execute on behalf of my account, on behalf of my traders in my live trading room. In the meantime, my friends, again, thank you for the opportunity to share this live trading with you, and I do appreciate the comments that you're making. Continue to join, subscribe. We're going to be offering some tremendous live trading data that is quality, that will help you as a self-directed trader make intelligent decisions. Have a great trading day. Have a great trading week. In the meantime, my friends, be well. And we'll talk to you soon here. Take care.